Ark Invest just released its much anticipated update to their Tesla valuation model. The first version of this was released in early 2020 and now they have updated it. This is the second iteration on their publicly released valuation for TSLA stock. So let's dive into it. I've marked up the whole document and I'm going to break everything down, the two different models that they have for the bear case and the bull case, and then the weighted average for the expected value of $3,000 per share for 2025. And I'm going to be as insightful as I can with this, even if you have already seen the report or heard someone else's analysis. But before I get into what Ark has to say, let me just flip across to my estimates for Tesla stock, simply based on compound annual growth. So last year I put out a video talking about how I believe Tesla could achieve 30% compound annual growth each and every year through 2030, and that would put my Tesla price target around $2.7 trillion in 2025, or what I've been referring to it as $3 trillion, which is what you will see is in line with Ark Invest's number for their expected value at least. And for those of you interested in what that would look like for the chart of Tesla stock, if that 30% continues into 2030, it would bring the market cap to $10 trillion, $10,000 per share. This is what it would look like. So just to bring some context, this is what I am thinking for Tesla stock, nothing behind my numbers except for compound annual growth rate, and I am assuming Tesla does solve for an autonomous network along the way. I don't have a specific target for that, but that is factored into my 30% compound annual growth rate. Anyway, getting back to Ark Invest, their new expected value for Tesla stock by the end of the year 2025 is $3,000. The bear case, which I will be showing in red throughout this entire video, is $1,500. They give that a 25% probability, and the bull case, of course, is $4,000, another 25% probability for that. They did run a ton of different matrices. I pulled it up. They ran through 40,000 simulations and selected what they believe to be plausible for each of the bull and bear cases, which is shown below. So for those of you wondering what math is behind the actual numbers for the bull and base case, here it is. 2020 is shown in gray. These are all of Tesla's numbers for 2020. Everything shown except we do not know how much they made in insurance. 500,000 cars, average selling price $50,000 per car. No human or autonomous revenue just yet, but you can look at the rest of those. They are calling Tesla's share price at around $700 currently. Moving on to the bear case, they're estimating 5 million cars by the end of the year 2025 to be produced in that year, with an average selling price about the same to $45,000. Pretty much they're not assuming that the $25,000 car will have eaten too much into that by then, which is quite bearish, I must say. But of course they're expecting the revenue to pretty much 10x, given that 10x in output. They're looking for $23 billion in insurance revenue, and they do expect human-driven ride-hailing to get launched, assuming that there is $0 in autonomous revenue, that basically Tesla is not able to launch an autonomous ride-hailing network, so they will instead default back to human-driven ride-hailing, which will still generate $42 billion for the company. So let's have a look at the bull case now. They do expect a significant drop-off in average selling price, which is bullish because of the $25,000 car really eating away at the sales, which is good. Tesla wants to cannibalize themselves, move down market, move downstream to a $25,000 car that can take over the entire market. They're expecting a good bump in revenues, I'd have to assume, for the electric vehicles because of that near doubling in production that they are looking for. But the insurance revenue does look significantly less, and I wonder why that is. It could be because we'll get to the fact that they are launching their autonomous ride-hailing in this situation, and maybe they have to pay out for accidents and legal fees. I'm not sure why. Someone let me know in the comments why the insurance revenue is so low in the bull case. Maybe it's because they are putting so many cars into the ride-hailing network instead of selling them to everyday consumers. And then of course they are assuming that Tesla goes full on robotaxi and does not end up doing any of the human-driven ride-hailing. So here are the key assumptions for the bull and bear case examples. We have the bear case 40% for using Wright's law of the gross margins, and for the bull case it's actually 25%, so they are expecting some lower gross margins in the bull case, but the numbers are just so much bigger that it's just still so impressive if they're able to pull this off. They're expecting capital efficiency per car, gross capex of $4,000 in the bear case and $6,000 in the bull case, maximum annual production increase 65% bear case and 90% bull case. Very, very bullish in the bull case. And they're expecting 60% of cars in the bull case to be on the autonomous platform in 2025. That is quite bullish. I don't know if I necessarily disagree with that number, but it would signify that that is Tesla's number one priority, autonomy, which I'll get to. They did mention this later in the report. And then they have 40% also in the bull case on the human-driven ride-hailing. So now I'm not sure if that's a mistake because they don't have any human-driven ride-hail revenue in their models up above, so I don't know how they're able to say that other 40% is also human-driven ride-hailing. That actually is very confusing to me. I'll let you know in the comments if I figure out why that is. But I do understand the 40% for the bear case being there, because we already talked about that. Interesting. Key updates to the model. They did push the target back 1 year from 2024 was their last year that they were modeling for. Now they're modeling for 2025, naturally, since it is 2021 at this point. And just remember that it is the end of 2025. It is not by the year 2025. So all of these numbers, the 10 million cars, that is for the full year of 2025. So meaning by 2026, they expect the price to be $3,000 per share, bull case of $4,000 per share. That's something that very few people remember to point out or even know about. And then they refined their estimates for Tesla's capital efficiency. They added Tesla's insurance business. For the bear case, they did add assumptions for the human-driven ride-hailing service, and for the bull case, of course, they increase the probability that Tesla will achieve full autonomy within 5 years. So here are some sections that I pulled out of the report that I think are important to go over. In 2020, Tesla spent $3.16 billion on capex, putting capital efficiency in 2021 at $10,330, assuming a 60% increase in vehicle production. Tesla announced that its updated cell chemistry and manufacturing process would reduce investment costs by 75% over time. So here's the bull case part. To give Tesla credit for what we believe is its superior capital efficiency, we lowered gross capital expenditure per car in our latest model. Given these updated estimates, along with an additional year of growth added to our model, our forecast for Tesla's unit sales is between 5 and 10 million vehicles in 2025. So there's a little background there. I thought that was important to bring up. Insurance. Currently, it's only available in California. Any gray text that you see means that is what Tesla is doing today. Yellow text is anything that is expected. Green text is bull case, and red text is bear case. Ark believes that in the next few years, Tesla could roll out its insurance offering to more states, underwriting its own insurance policies because its vehicles have better than average safety profiles. Tesla should be able to use real-time data to offer insurance in its vehicles, pricing it dynamically, lowering customer acquisition costs, and increasing margins. If it were to sell 40% of vehicles with its own insurance offering by 2025, Tesla's insurance revenues could approach $23 billion annually in our bear case. In our bull case, however, Ark estimates that as robotaxis ramp, Tesla's insurance revenues will be incorporated in a platform fee. Insurance boosts our price targets by roughly $60 billion in 2025. So there you have it. That is the reason for why insurance is actually lower in the bull case in 2025. So that's a good nugget of information. Human-driven ride-hail. Ark's bear case now includes Tesla's opportunity to launch a human-driven ride-hail service. In our bear case example, ride-hail could add an additional $20 billion to Tesla's operating profit by 2025, increasing our price target by about $500. In preparation for its robo-taxi service, Tesla could launch a human-driven ride-hail network first, delivering a highly profitable recurring revenue stream and limiting the downside of a failed autonomous service. Alright, moving along to the fully robo-taxi scenario, Ark now estimates that the probability is 50% that they are able to do it by 2025, which is a significant increase from their previous 30% estimate. Ark estimates that Tesla's vehicle fleet gives it access to 30 to 40 million miles of data per day, up from 20 million per day last year. If successful, Tesla could scale its robotaxi service rapidly, allocating the additional cash, in turn, to manufacturing capacity serving its robotaxi network. So that's a key point, along with, in our bull case, ride-hail would account for the majority of Tesla's enterprise value in 2025. That's what I was alluding to earlier, and there we have it. That is the ultimate bull statement from Ark Invest on Tesla's future. Moving on to this fascinating chart, you'll see there down at the very bottom, they do have this kind of tailing off down into the negative per share, just to, I would say, wait out the rest of the model. And then up to the right, we do have, for instance, $28,000 per share, a scenario that could push Tesla stock to that point by the year 2026 if something happens. Their expected value is the weighted averages of all of their 40,000 models based on the probabilities of each, and I trust them on this. Some are saying they are bears for this. Some, of course, are saying they're too bullish. I think they are pretty much spot on with what we know for Tesla at this point. It lines up with what I am expecting for 30% compound annual growth from around the current price levels. So I would not be surprised if Tesla is able to hit $3,000 per share expected value. Of course, this is not financial advice at all, but I do think Ark is pretty spot on, in my personal opinion, with their $3,000 per share expected value. So here are their different ranges with their models, and I wrote over in white the different scenarios for each one. In gray, they're basically assuming production doesn't go well, ride hailing doesn't happen, and robotaxis just don't happen at all. In green, they're assuming that ride hailing goes well, and in black, they're assuming it's pretty much just car production. Tesla goes off with producing cars. And the biggest one, the one driving the most of Ark's price target, is of course the robotaxi, which is in purple. And there you have it. In many of our low-end cases we modeled, production constraints limit Tesla to fewer than 4 million cars produced per year, while technological and logistical bottlenecks prevent the launch of both human-driven and autonomous ride-hail networks, as shown in gray. When production is not constrained, a human-driven ride-hail network increases the expected price target range, as shown in green and navy. Finally, in purple, the high-end price targets incorporate the assumption that Tesla launches a robotaxi service. And here we are, Ark's 2025 estimates. These are all for the expected values. Remember that $3,000 weighted average. And we have, I'm just going to focus on the revenue and the market cap ones. I think it's important to point out the discrepancies they have between the revenue and market caps on their charts here. They're expecting electric vehicles to be the majority of the revenue, but robotaxis to be in second place, human ride hail and insurance not to be too big. But if you look at the market cap, they're saying the main driver for the market cap in 2025 for Tesla will actually be robotaxi, and electric vehicles will be in second place. So I think that's very interesting how they're thinking about how the market cap will actually be viewed by Wall Street in comparison to the actual revenues by the company. So in conclusion, Ark's 2025 price target for Tesla is $3,000 per share. Their bear case is roughly $1,500, and their bull case is $4,000 per share. It's important to note that they do not include energy revenue or solar in their models. A lot of people are saying that this decision is bearish, but I think they are right on so many other things that I don't know that including the energy side of the business would make too much of a difference here, when the majority of the revenue and the value is actually going to be coming from robotaxis and car production. They also didn't include any Bitcoin assumptions, which I also think is fair. I don't think Bitcoin is really a big deal at this point for Tesla, but it could be going forward if they do accept it as payments, and a lot of people choose to use that, and Tesla really builds up a big store of Bitcoin on their balance sheet. I think as it stands, this is an excellent model, some very good research done by Ark Invest. I hope my breakdown was helpful. I tried to segment it as best I could, and if you have any questions in the comments, I'd love to continue this discussion going forward. What do you want to know? What do you want me to break down further from Ark Invest's research? And I will catch you in the next video. Until next time.